This is Robert Kraft, and I'm coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium 2019 in Vancouver, BC. With me right now is Brett Heath from Metalla Royalty and Streaming. It's a publicly traded company, two symbols for you, MTA on the TSX Venture and MTAFF on the OTC. Brett, welcome to SNN Live.
Thanks for having me.
Actually, I should say welcome back, but it's been a couple years. Yep. So for our audience, let's start off first with an overview of the company, and then we'll go from there.
Well, we are a precious metals royalty and streaming company, and what we've been doing since just about 3 years since inception is just building up a portfolio. We focus on assets that are being built by big operators. And to do that, we have a unique model that we call it the third-party model. And what that is we focus on pre-existing royalty holders and bringing those royalties into Metalla to give us exposure to these bigger operators and these bigger projects, and the ability to provide a lot more optionality for our investors.
So like I said, we last had you on here, I think it was actually about 2 years ago at this conference. So let's get an update, let's say, from the last 12 months. What's been going on at Metalla?
Well, since we started, Metalla has been able to complete, on average, about 5 transactions a year. Okay, so that the sector average of all the peers is about 1.5. We're the smallest royalty company, and we're also the highest growth. So there's a pretty attractive nature to the investment, being able to get the high growth. Most of the royalty companies out there are north of $1 billion market cap. We're sitting around 150 million, and being smaller gives us a pretty big competitive advantage to be able to get a number of transactions done. So that's what we've done so far. Since inception, we have completed 13 transactions. We've acquired 43 royalties. We've got exposure, and owning a royalty, what a lot of investors don't always remember is it's a free perpetual option on that land forever, and it's free carried. So once you buy these royalties, there's no further capital outlay from the royalty holder. So having a huge portfolio, having exposure to cover a lot of the major trends, a lot of major geological trends in large land packages, more importantly, that are being advanced by some of the biggest operators in the world, provides a lot of potential optionality for our investors in our portfolio.
So are you commodities specific, or because I'm trying to want to know a little bit more about the criteria. You mentioned a few of them already. So what are some of the other criteria that you're looking for when you're evaluating a potential project to bring onto the portfolio?
So we're precious metals focused, and for a royalty company and any type of royalty company, we think it's really important to focus on one or two commodities. A royalty company for investors is just another means for them to get exposure to the underlying metal, right? So we stick with gold and silver only. That's the commodity that we're trying to give our investors, and we're giving them the diversified from a jurisdictional perspective, from an operational perspective, and then also from a stage perspective. We've got producing royalties. We've got one of the most exciting development portfolios in the business, with about 12 assets that we think will find their way to production over this next cycle. And we've got a huge exploration portfolio, right, that provides that optionality. More importantly, we don't have to spend all that money on drilling, right? We get that free carried interest all the way to production or discovery or whatever is the milestone that we make that investment for.
So for our investors who may not be totally familiar with the royalty and streaming business model, you guys are in essence like a strategic investor for some of these, at least on the exploration and speculative side, to help them take their projects to the next level. Is that correct?
I would say the traditional model of the royalty and streaming companies is really a capital provider for the sector. So what the bigger companies, or the general business model is, they give capital to the mining companies. The mining companies use that capital, whether it's for exploration, development, expansion, and in exchange for that, they get a percentage of gold or silver or whatever metal that they're investing in back. So that's the general model or business model that the sector follows. And the opportunity that we saw at Metalla was there was this huge market of pre-existing royalties. And a royalty is worth a lot more in a public market vehicle with a big portfolio than it is by itself. But that was, we really wanted to focus our business on giving our investors exposure to the biggest operators in the world. And that was how we were able to do that. Because the big operators aren't going to take, the big mining companies in the world, they're not going to take a $2, $3, $4, $5, $10 million check, right? But the old prospector, the private equity fund, as they're divesting these assets, they're retaining these royalties. And look, these royalties need homes, and we've made a great home portfolio for all of these holders, and it's worked out. The business and the model has worked out really well so far.
And then from what you can tell me, what are some of the company's value catalysts now moving forward for the rest of 2019?
So going forward, one of the biggest things for Metalla is scale, and I think I feel comfortable that we've at least got to kind of stage one on that, right? So we've got 43 assets, we've got production, we've got development. Going forward, we're going to want to scale this further, right? So that means a couple of different things. One in particular is we want to grow our cash flow. And now that we're big enough, we have the scale, I think we're going to be able to lever into some assets that are currently producing. Two, we want to continue to diversify our risk. Right? Investors are willing to pay a premium for royalty companies that give them that broad exposure. It's just a better way, instead of investing in an ETF and paying a fee, they can invest in a royalty company and get paid to wait, right? And I guess as a follow-on to that, royalty companies have a huge amount of leverage, not only to the price of gold, but also the underlying assets that they have royalties on. If there's a discovery, if there's an expansion, if there's any type of material positive event, the royalty holder gets all that value. So those are things that I think will continue to happen as this cycle moves forward and capital comes into the sector. Our exploration portfolio is going to get drilled, right? Our development projects are going to get built, and the ones that are producing are likely going to get expanded. So it's a really great risk-adjusted way to play this paradigm shift that I think we're right in the beginning stages of for gold and silver.
And where can our audience go and find more information about Metalla?
You can visit our website, which is metallaroyalty.com. Again, we trade on the TSX Venture under the symbol MTA, and in the U.S. under MTAFF.
My name is Robert Kraft, and I'm coming to you live on SNN Live. And we're at the Sprott Natural Resource Symposium 2019 in Vancouver, BC. With me again has been Brett Heath from Metalla Royalty and Streaming, publicly traded company, two symbols, MTA on the TSX Venture and MTAFF on the OTC. Brett, always a pleasure, man.
Thanks for having me.